Hello, everyone. My name is Andrey, and I am a licensed mortgage professional in California. And one of my goals is to provide educational videos about mortgages and mortgage related topics. Today, I want to talk about equity in a home and how you can use that equity to build wealth. If you're shopping for a house right now in February of 2022, you are facing some challenges. High prices, rates are on the rise, lack of inventory. There's not a lot of houses out there. Bidding war. There's a lot of offers and a lot of people bidding on the same house. You have to offer above asking price. But if you're a homeowner, you might be sitting on a gold mine because equities nowadays are at all-time high. Now, due to COVID, consumer debt is on the rise as well. People lost jobs and they maxed out maybe on their credit cards, or they had to take out the personal loan or something like that. So consumer debt is increasing as well. Well, you can use equity in your home to consolidate that debt, and you can actually pay off your house sooner. So let me show you how you can do that. Average consumer in the United States has 4 credit cards, minimum of 4 credit cards, with an average balance of $6,000 on each credit card. So let's take a look at this scenario. You have 4 different credit cards, right? You have American Express, Visa, Capital One, MasterCard. And these are, let's say, your balances: $11,000 on American Express, $6,600 on Visa, $4,400 on Capital One, and $2,900 on MasterCard. These are your minimum monthly payments that you are obligated to pay each month. $371 on American Express, $295 on Visa, $215 on Capital One, $196 on MasterCard. Now, did you know that average credit card interest rate is 16%? Some credit cards are at 20%, 25%. Some credit cards may have a less of an interest rate, but on average, it's 16% interest. So let's say you have 17.9 on American Express, 15.6 on Visa, 14.5 on Capital One, and 22% on MasterCard. Okay. Now, on top of that, let's say you bought a car a few years back, and your current balance is $29,497, and your monthly payment is $581. So if you add up all your current balances, you'll have $54,887, your total debt. Now, your minimum monthly payments are at $1,658. So every month you're paying $1,658 towards your credit cards, auto loan. You may have student loans, you may have some personal loans, other debt, but let's say this is your situation, okay? Now, on top of this, you have your current mortgage, okay? So let's say your mortgage balance is $355,849 at 3%, and your monthly payment on your mortgage, including taxes and insurance, is $2,123. So total between your mortgage payment and your debt payment, you're paying $37.81 a month towards the debt. Now let's say because prices increased, that means that equity increased in your house. So let's say your current value of your house is $620,000. So there's a big amount of equity built in your home. What if we take that equity and have it working for you? Let's say we're gonna consolidate your consumer debt with your mortgage. So your new loan is gonna be $410,736. So we take your current mortgage, we add your total debt. Your new mortgage is $410,736. Now, your current rate, today's interest rate is at 4%, and your payment, the new payment, is going to be $25.83. Okay? So your payment just increased by about $400. You were paying $21.23. Now you're paying $25.83. So it increased. But what you just did is you eliminated your debt and you eliminated $1,600 in monthly payment. So you were paying $37.81 total, but now you're paying only $25.83. So your net gain is $1,100, almost $1,200, $1,198. You are now saving almost $1,200. You're paying that towards your debt, but now you're saving that. So what are you going to do with $1,200 gain each month? If you're anything like me, chances are you're going to spend it, right? Buy something else. But what if you would take this money that just freed up and you will apply it towards the principal of your new mortgage? Can you imagine on a monthly basis taking $1,200 and applying towards the principal? What will happen is you will reduce the term of your mortgage by 15 years. Instead of 30 years, that you will pay off your mortgage in 15 years. And on top of that, you will save approximately $166,000 in interest. That's interest over 15 years that you're not paying. So that's your saving in interest. Okay? So you eliminated debt, you put more money into your pocket, you also applied that towards the principal, you've reduced your mortgage term by 15 years, and you saved $166,000 in interest. I believe it's pretty incredible. Now, if you don't want to apply it towards your principal, that's totally fine. What you can do is you can take this monthly amount and invest it into a good mutual fund with a good history, a good rate of return, and now you're having your money working for you instead of against you. And now you're building your wealth instead of building somebody else's wealth, like credit card company, right? You can do this exercise yourself. Take out all your credit card statements, take out your auto loan statement or anything else. Put it together, put it on a piece of paper, add up all your payments, add up all your outstanding balances, and see how much total debt you have, how much monthly payments going towards those, and what is the interest rate. You know, if you flip your credit card statement, on the back of each statement, you should see how much interest that particular credit card is charging you. And if we can help you do this exercise, we'll be happy to do that with you and see if debt consolidation, refinance is beneficial in your situation. Feel free to reach out. My phone number is going to be in the description. You can email me, you can give me a call. I'll be happy to talk to you, to review your situation and see if debt consolidation refinance is beneficial in your situation. That's it for today. Thank you for watching. Leave your comments. If you have any ideas or any suggestions, please leave that in the comments as well. And watch out for future videos. I'll be putting out something shortly. Thank you for watching. Have a nice day.